we're hearing a lot about because we live in Michigan, but actually Atlanta's where they're having some real problems in the banking area. And it really deals with making too many loans to the construction and developer type projects. Normally the regulators tell banks that they want them not to be in these type of loans in excess of 100% of their capital. They really want less than that, but the average in Georgia is 177%. And so that's a huge problem for those banks. It's a problem both for earnings, liquidity, and the whole bit. You get the picture there. So there's at June 30, they don't publish the names, but you get the numbers. There's about 120 problem banks in the country, and over 20 of them are in the Georgia district. But the point I want to make about all that is we still are making money in the banking business, even though we're dealing with some huge issues. The banks have been facing some real problems over the last few years. Banking has become more, and they're just like other businesses. I know everybody in their own business talks about how much tougher it's gotten. Competition is greater. Banks are experiencing exactly the same scenario. And you can look at it in your own personal situation. The consumers have gotten a lot smarter. They look for ways to earn more on their own money, and so they're shopping on the internet, they're reading the Wall Street Journal, and they're looking for the best place to put their money to get the highest return. That creates a cost of funds challenge for the banks, that it costs them more money. The other side is that, you know, with the excess liquidity that we've had in the past, that the consumers, there's a real opportunity for them to borrow, so the competition on the other side that has been bringing the rates down, so they've had kind of a squeeze on their margins. So if you're in a manufacturing business, this is your cost of sales. The banks call it a margin. But you can see compression. If you look at the annual reports of these banks where they publish that information, you'll see that over the last few years, you can see a downward trend in their margins, so they're being really challenged. Now with the problems in the economy, we're seeing an increase in non-performing loans. Those are the assets that they have that the people aren't paying according to terms. And when you read the annual report of the bank, all you have to do is flip over to the footnote that deals with their loans, and they specifically disclose to you what those numbers are. And so you can see there's a trend there as well. And the impact to them is those are assets that are not making money for them. The other part of that that's not quite so obvious is it's a higher cost for them. So in other words, when I'm dealing with a problem loan, if I'm a banker dealing with a problem loan, I've got somebody dedicated who's not out on the streets bringing me new loans. He's in there dealing with trying to collect it. It's costing me money and it's costing me time. So that's a new problem that they have. I won't go into all the details on this because you heard a lot about it, but liquidity has also been a huge problem for the banks. Last week, the Fed set a record for their loans to the banks when they hit $121 billion, which was, to give you perspective, at the end of March, it was $37 billion. So you can see what kind of borrowing is going on out there because of the need. With all this that's going on, the banks need additional capital. Right now, the market's not there for them. It's very hard to borrow money or for them to raise money. Who wants to invest in a Michigan bank right now? You know, we saw yesterday in the press release, I mentioned that the CEO of one of the local banks says he's going to be raising money over the next couple of months. I think it's going to be a real challenge for him. We mentioned, kind of to wrap up on the national scene, Goldman and Morgan Stanley. Both of them actually already own banks. They have what you read about when you read about Walmart. Walmart wanted to open a bank in Utah. Both of these companies already own banks in Utah. They own what's called an industrial loan company. And these are a non-retail bank. What's going to happen is Goldman and Morgan Stanley are going to turn those into national commercial banks. I think it's going to be interesting to watch and see how fast they grow and what they do with it. It will create some challenges for them. They're not used to the kind of oversight that they have had in the brokerage business that they'll have in the banking business. So that's the national. I'll do a fast one on the Michigan, and you can wave at me when you want me to quit. So Michigan right now has a big red circle around it. The regulators are just all over Michigan. They're very concerned about it, and it's really a political thing. They're so concerned about how it makes them look that they are very tough on the banks right now. They're inconsistent. One of the problems that they've had is over the last few years They really cut back on the number of examiners they had because the economy's good, and the banks are a mirror of the economy. So the reality is the banks have looked good, and therefore that was it helped the regulators. Right now, with the economy going soft, the banks are having a tough time, because if you don't make your loan payment, then that causes the bank a problem. So it's a real simple sort of explanation of that. But the regulators are looking real hard at our Michigan banks. They're very challenging to them, and they're taking, because of this shortage that they had of regulators, and now they're hiring a bunch of them and putting them out in the field. These people are inexperienced, and we're getting inconsistent application of the rules and how things go. The issue right now on the Michigan front is really the bank holding companies. They've got liquidity problems. With the banks making less, they can't upstream dividends. One of the things that you're not hearing about is that the lines of credit are getting pulled at the bank holding companies. They're getting surprised with, hey, we're not going to renew your line. Good banks that are making money and have been doing okay and are secure, but it's just the people that make those loans are saying, wait a minute, this doesn't make sense. This is too high risk for us. So that's kind of a little ray of sunshine in your day.
Thanks as always, Jon.